Hello, this is Paul Gibson with the Academy of Trading and Investing once again. We are here to help you understand when to buy and when to sell stocks, and perhaps help you make decisions on your option trades as well. We're going to expand on our discussions on technical analysis. Today we're going to discuss the relative strength indicator, sometimes called the RSI. To define the RSI, it is a relative strength indicator and is a momentum indicator that measures the magnitude of a recent price change to evaluate overbought or oversold conditions in the price of a stock or other asset. The RSI is displayed as an oscillator, in other words, a line that moves between two extremes, and in most cases it's on a variable scale of 0 to 100. The indicator was originally developed by J. Wells Wardle, Jr., introduced in his seminal book, New Concepts in Technical Trading Systems. Traditional interpretation and usage of the RSI are that of values over 70 indicate an overbought situation, in other words, overvalued, and may be primed at this point for a reversal or a corrective pullback in the price. Conversely, an RSI reading of 30 or below indicates an oversold or undervalued condition, preparing possibly for a reversal to move in the opposite direction. This is what the RSI looks like. We have chosen Tesla today to take a look at what the RSI can help us understand. As we see here, the stock prices continue to come down, and we eventually get this oversold signal when the RSI gets below 30. This is a scale of 0 to 100, and we have predefined here the marks of 30 and 70. So, the indicator is saying we're in a bearish function, and we can prepare to buy this stock because it is oversold. Would we knee-jerk into this at this point? Maybe. But if we're wise, we'll also follow the other indicators. For example, in this case, we'll just look at the candlesticks. But we could buy anywhere in this range. Now let's imagine that we're a little bit conservative, but we think, aha, let's buy it at 190. That would not be a bad thing. We may be a little bit disappointed for a few days as the stock price continues to go down, but as we continue to monitor the situation, we see, sure enough, we get some very bullish candles here, and the RSI moves above 30, which puts us in the range of hold on. Hang on, buckle up. This is going to be a nice ride. And then we see a little bit over here that the RSI goes above 70, which indicates prepare to sell. Let's imagine at some point we decided to get out 250. That would be a nice gain, don't you think? That would be a $60 gain in less than 2 months. So let's take a look at the detail. Once again, we see the scores below 30 indicate prepare to buy, and scores above 70 prepare to sell. In between times, we're not really sure what's happening here. We'd have to look at our other indicators to give us a better idea. But what this is telling me, just hang on, just hold on. It may not be time to make a move at any particular time when the scores are between 30 and 70. So let's look for some signals. Once again, we see that the RSI dips below 30. Prepare to buy. We watch the candlesticks going down and down. Once again, perhaps we decide to buy at 190. We wait for a few days. We don't panic. We hang on because we still have this prepare to buy signal. And sure enough, the stock price goes up. Then a little bit later, we get in a position where the RSI goes above 70. We're thinking, aha, perhaps it's time to sell. So we get out right away because after all, we just made a $60 profit in less than 2 months. $60 at this point is probably a 30% gain in a very short period of time, relatively speaking. And we see that we could have sold anywhere in here. At this point, the RSI dips below 70, and we see why on our candlesticks. Would we know when this is coming? We would not, unless perhaps we're watching the news media, which might give us an idea, but many times the news will come out, stock prices will drop. We don't get a chance to see the news media before the price action has already happened. Once again, the RSI stays steady. If we're doing a little bit more day trading, we might have some increased activity here, but we'd want to look at the RSI on not a daily period, but look at our candles on hourly periods to see if there's an additional opportunity to trade or day trade. But for a swing trader like myself, and for most people, this period in here would have been a great time to make money. Once again, this is Paul Gibson with the Academy of Trading and Investing. We're very happy to be here to help you understand when to buy and when to sell stocks, and perhaps know how to prepare to make option trades, whether they're bullish or bearish, whether you're shorting or going long. These techniques will also help you with options. So, if you'd like some more information, please go to academyofti.org, where we have some additional videos that might be helpful to you. We have a great selection of articles. In fact, there's a wonderful library there full of articles that may help you with additional perspectives on how to invest. And if you'd like, you can also sign up for coaching by contacting us. Your first conversation will be free to see if coaching really is a good fit for you. We don't want to try to help you if you're not prepared or if it's not going to be a helpful situation for you. So please contact us. We'll be glad to have that free conversation. We can determine if coaching is a good fit for you. We can see what you're already doing and see what you need to expand on. And as usual, Notes from a Profitable Investor is available to you by clicking on the website when you get there, or going to Amazon.com. You'll find Notes from a Profitable Investor, and it's also available on Amazon Kindle for those who want to use it on their device. It's been a pleasure for me to be with you today. We'll look forward to talking to you another time. Please check back with us regularly.